Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing market cycle theory. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, before we get started, I will say that when it comes to market cycle theory, there are a lot of people out there that would argue that market cycles are just a figment of our imagination, right? They don't actually exist. They're just something that humans come up with to better understand the market. And I don't really think you can blame people for thinking about it in terms of market cycles, especially given the fact that the last three peaks by Bitcoin all occurred in Q4 of the post-halving year, right? So this cycle, if it were to play out in a very similar fashion, it would correspond to Q4 of 2025. So when you think about like market cycles, what a lot of people think of is, a low in the bear market year or the early part of the post-halving year. That was 2015. Same thing right there, and then same thing right here. And then ultimately, some type of build up into the halving and then acceleration after the halving into new all-time highs. But something's happened this time that's never happened before, and it's causing a lot of people to question what ramifications does that have on the rest of the cycle, right? And the truth is I don't really know. I mean, so far, the cycle theory stuff has been pretty reliable in terms of the lows and the highs, and so I don't necessarily want to try and detract from that. Be that as it may, we've never hit an all-time high before the halving, right? I mean, historically, if you just simply go back and look at prior moves to all-time highs, what you'll notice is that every single one of them occurred after the prior halvings, right? And in two of the cases, they occurred actually in the post-halving year, right? This was 2013, and then this was 2017. And then here in the last cycle, we actually got a new high in December of the halving year. But you also have to remember that the halvings within the calendar year have gotten earlier and earlier. For instance, back in 2012, the halving was actually relatively late in the year, so the new all-time high occurred only a few months after the halving. In 2017, the halving was, back in the summer of 2016, so it did take it a while longer. The last cycle, the halving, was in May of 2020, and it took about half a year or so for Bitcoin to breach all-time highs. But when it comes to cycle theory, what's normally happens is, you have your bear market year, you have your pre-halving year where you typically kind of go up for half the year and then you go down for half the year. But this last year, 2023, we didn't see that. It was basically just up for the entire year. And what's interesting when it comes to all this cycle theory stuff is that historically, after Bitcoin breaches all-time highs, the market can heat up relatively quickly, right? And so if we're already doing that before the halving, it sort of raises the question, does this cycle have something different in store? Will it follow historical cycles where you get your peak in Q4 of the post-halving year, right? We had a peak in November of 2013, a peak in December of 2017, and a peak in November of 2021. And so if it plays out like historical cycles, that would mean a peak sometime in Q4 of 2025, or you could have a peak, say, like mid-2025, and it still be considered, I think, a fairly normal cycle. If you look at prior approaches to all-time highs, in this case over here, you just broke through it. In this cycle, what happened was you actually had a consolidation period. You basically swept the high, you went slightly above it, you had a 30% drop back to the bull market support band, and then eventually after that, Bitcoin just went parabolic. But the thing to note is that after Bitcoin broke new highs here, it only rallied for another 30, or let's say 40 weeks. After it broke new highs here, durably, it only rallied for about 35 more weeks, right? After it broke new highs here, it rallied for about 17 weeks. If you include the November high, it obviously rallied for a bit longer, about 49 weeks. So in all prior cases, you're looking at, a rally after durably breaking the all-time highs that lasted anywhere between, say, 35 to 50 weeks or so. The problem with that is that, 30 weeks from now only puts you, 35 weeks only puts you at the end of the year, right? 50 weeks puts you at the very beginning of next year. And so I think that's what has a lot of people sort of questioning, well, how is that going to work? Like, how do you get out to Q4 2025 if you're already putting in new all-time highs now, right? So, and again, if you're not familiar with sort of the terminology that some people are running with, it's basically like a left translated cycle, right? The idea that the top occurs earlier in the cycle rather than later in the cycle when it normally does. At this point, I mean, I still think there's evidence to support both cases, right? Certainly the evidence to support a left translated cycle is the fact that we put in a new all-time high before the halving. A lot of people have historically said that it's the halving that leads to the bull market. I mean, you almost can throw that out the window, right? I mean, we've already put in new highs before the halving, so how can you say it's only the halving that causes it when it's now occurring before the halving? So I've always had the opinion that the halving has an effect, right? But it's not the only thing, right? I certainly think it has an effect, but it's not the only thing. I also think it depends on monetary policy, right? It depends on liquidity. There's other cyclical behavior I think that it depends on beyond just the Bitcoin halving. That's only one part of the equation, right? It's sort of the supply side. It tells you nothing about the demand. So sort of in favor of the left translated peak stuff, if we can durably hold these highs, then it would have more credibility, I think. The counterpoint is if on the other hand, what happens if we don't, durably break the high, right? Or what happens if we stay risk on until what we've historically talked about, right? Like 56% dominance by Bitcoin. And, like if we see that altcoin liquidity go back to Bitcoin as we go into the halving, and then there's a cool off phase, if there's a cool off phase after that, kind of like how Ethereum cooled off after the merge, right? If you remember the merge, Ethereum had a pretty impressive rally. It topped out, found a local top 1 month before the merge, and then on the merge, it was a lower high, right? And then Ethereum really cooled off for a number of months before picking back up. So I think at this point, I would argue it's too soon to know. I mean, it's always going to be too soon to know. It's not like anyone has a crystal ball, but the point is if you durably start putting in closes above the prior highs, history shows that it's typically doesn't last for 2 years after that, right? Or a year and a half. It often lasts between like 35 to 50 weeks, right? So, between like 7 to 8 months to 12 months or so, and not too much longer. And we've already put in a new all-time high. So I guess the thing to look for is what happens after the halving, right? What happens after the halving? If the market continues to accelerate, then I think that there's more evidence to suggest you could get a left translated peak that comes, much earlier than normal, right? And I suppose the implications of that would be that then you get, on the other side of that, right? If you peak earlier on, then that could have, negative ramifications following that, potentially for the next couple of years, right? Because we just basically front ran everything, right? I mean, every possible good thing under the sun gets priced in. It's kind of like when the QQQ was launched in 1999. The Nasdaq rallied for a year, and then it had a pretty brutal bear market after that. But what if, on the other hand, you don't durably go above the highs? Like maybe you break them again, right? Maybe you go into the 70s or something, but it doesn't go too much beyond that in the short term, right? What if something like that were to happen? Then I still think there would be some evidence to suggest that it might just simply play out how it always has, right? Where you still get a peak sometime, out in 2025, but it's not, the path there is not what everyone's thinking is going to be. It's funny because, when I started my YouTube channel, what I said back then was that Bitcoin, would sort of go to six figures in 2023 or 2024. That was kind of what I initially thought way back then. But I thought, I wasn't really anticipating at the time a like an 80% crash. But once 2022 got started and that became apparent, I really pivoted my stance on that. But it's interesting because now here we are before all-time high or before the halving, and we're already putting in all-time highs. So, and I know a lot of people are certainly convinced that Bitcoin's just going to rally here and not stop until 150K or something. And to be completely honest, who am I, right, to say that that can't happen, right? I mean, I'm not going to attempt to say that it's impossible for that to happen. You can see what the QQQ did back in 1999. It actually launched at around 48 and rallied all the way up to 120 before then crashing down to 20. So I'm not going to try to limit that. The only thing I would say is what happens if Bitcoin cools off after the halving, right? What if it cools off after the halving? And if it cools off after the halving, then maybe there's evidence to suggest that it could simply play out how it always does. And once again, everyone's trying to overthink it, right? And what I mean by that is in order for it to play out like it normally would, I imagine you would need some type of catalyst to induce sort of a cool off phase in the market where the market really has to digest the extent of this move. It already digested a lot of this move over here, right? Because then it went sideways for several months, but it hasn't really digested this move at all, right? So if we durably go to new highs quickly, like all prior cycles, then it gives more evidence to the translated peak theory. But what if there's a catalyst that keeps it from doing that? And then, of course, the question will become, well, what would that catalyst be? One of the things I've talked about a lot is that in terms of monetary policy, this rally has been more like 2019 than 2018, or sorry, than 2020, right? Not in terms of hitting new highs, because in 2019 we did not hit new highs, but in terms of the extent of the rally so far, right? This was about a 350% rally. This is about a 350% rally as well. I don't really think it was fully 350 if I actually get it there. It was about 340, which is essentially what we've just seen. But the difference is that this one did not breach new highs, whereas this one has. But what would the catalyst be, right? If we are to play this cycle out like we normally do, where you get a high, your peak in the post-halving year, I have to imagine there's going to be a catalyst that would make the market cool off for a while. Because again, we're seeing a lot of retail people come back in, right? I mean, the social risk has been going up recently. If I pull it up over here, let's just go ahead and go pull it up, right? It's back up to in the 0.3 to 0.4 risk band. So there are some people coming back. It's clear that some people are coming back. So if we go back over to the chart, then you have to say, well, what would the catalyst be? And the things that there's two things that I can think of, right? And one is the fact that when gold broke out last cycle, it led to a cool-off phase by Bitcoin, right? You can see it pretty clearly, just sort of overlaying this chart here, right? There was this period where gold was trying to break out from this high right here at around 1400, and then it finally broke through. And when it broke through, it led to that cool-off phase by Bitcoin after a 350% rally, right? After gold broke out. And also, what happened around that same time is that the yield curve uninverted, right? So if we were to overlay, say, the US 10-year minus the US 3-month, and we put that on the chart, and let me switch that over to a different scale. Let's do a new right scale. If you look at it like this, you can see that, let me switch all this stuff back to what it needs to be at. And let me hide gold really quick. It's kind of hard to see everything going on here just because of everything we have up. But if you look at say the inverted yield curve back in 2019, and we sort of just draw a line at the zero mark, which would be about right here, you can see that when the yield curve, when we had this inverted yield curve, before it uninverted, Bitcoin found a local top. It didn't go on to put in new lows, right? It didn't go on to put in new lows, but it did cool off for a little bit. And again, this cycle, we also have an inverted yield curve, and it's actually a lot more inverted here than it ever was back over there, right? There's not a lot of evidence, though, when you go back and look at all the prior inverted yield curves. There's not necessarily a lot of evidence to suggest that the depth of inversion has any impact on how bad it has to be upon the uninversion. But it is just something to note that what caused Bitcoin to cool off over here was you had gold breaking out, you had an inverted yield curve, and you were just before the Fed started to cut rates, right? And if you overlay interest rates, right, you can see that it was just before the Fed started to cut rates. Let me there, right? You can see the Fed started to cut right here in July, and Bitcoin topped out just before that. And so, going back to this all this cycle theory stuff, I'm kind of at this point right now where if Bitcoin does what it normally does when it reaches all-time highs, which is either break through it immediately or consolidate for a month and then go through, it would give more evidence to support a translated peak. Because history shows that once those peaks are durably broken, the clock starts ticking, right? You have a few months, 6 months, maybe 12 months at the most, but you don't really have that much longer, right? And in the case where, in this case over here, where it ended up being closer to 50 weeks, right? I mean, really the peak occurred only 20 weeks later, and we had sort of like a slightly higher high that occurred 50 weeks later, right? But for most of these times, right, after that high is breached, you don't really see the market go on for another 2 years, right? So when we think about this cycle, and we've talked about this a lot, I do think there's elements of prior cycles, and some people say, well, is it 2019 or is it 2020? Or 2021, or is it 2017? I think the correct answer to that question is it's 2024, right? It's not 2019 because we didn't put in new highs in 2019. But it's also not 2020 because we're not in QE, right? If you look at the balance sheet of the Fed, it's decreasing, just as it was over here in 2019. So this cycle, I think, is going to keep throwing us curveballs. Because this is the first time we've ever seen a new high before the halving. And it's also the first time that, I believe it's the first time we've ever put in a new all-time high while we are, at very high rates and aggressive QT. So it's really interesting. And I think the whole market cycle theory stuff is kind of fascinating. And I do empathize with the people that say it's just this made up thing, right? I do, because I don't really think that if you fast forward 100 years and then we look back on Bitcoin's price history, I can't imagine that every 4 years in Q4 of the post-halving year, I can't imagine that you have a peak every 4 years in that same quarter, right? Now, maybe this is where the narrator says, but that's exactly what happened for the next 100 years. But it's hard for me to believe that will happen forever. At some point, I would think there's going to be something that disrupts that flow. I don't know if it's going to disrupt it this cycle, but at some point, it probably will be disrupted. And if you think about where we are in terms of as measured from peaks and as measured from lows, if you were to go look at ROI after cycle peak of Bitcoin, and you take it out to the following peaks, you can see that we are extremely hot right now in terms of where the market is, right? I mean, look at where we're basically back to an ROI of 1 because we're basically at the peak, when in the last 2 cycles, at this point in the cycle, the price was still down 66% from the highs. 66% down from the highs would put Bitcoin at like 25K, just to give you some perspective. So when I look at this chart, I'm like, well, we are pretty extended. But then there's this other thing that I remember, and that's a lot of people make this assertion that I can kind of get on board with, not taking it to the bank, right? But kind of get on board with and understand that the last cycle, April was the top, and November was just sort of like the dead cat bounce that somehow put in a new all-time high, right? I'm not asking you to buy that. I'm not selling you that. I'm just saying, pretend like that is what happened. Pretend like this was not a new high, okay? And if you take it from April, and we look at last cycle, and we switch this to April, it doesn't really look that different, does it? Right? It kind of looks like we're right where we should be. But if you measure it from, say, the lows, we are extended, but not that much. Because in 2 cycles ago, we basically reached this ROI from the low only another month or 2 from now. But what you'll notice in the last 2 cycles is that between days 500 and almost 700, Bitcoin didn't really go anywhere. So what happened was there was about a 200-day period where Bitcoin really stalled out and didn't make a lot of progress. Now, in both of those cases, it did eventually go up a lot more, but it took until the end of the halving year and the post-halving year to really see that the move finalize, okay? So in terms of market cycle theory and all this left translated talk, all the normal talk, first of all, what I will say, and I've been making videos on this for a long time, is I think it's worthwhile to respect all views, right? Because at the end of the day, no one knows what the hell is going to happen. Everyone has their opinions, but no one knows what's going to happen, and certainly not me. So I would say I think everyone should be somewhat open-minded about it and see what the market gives us. If the market gives us a cool-off phase, let's call it after the halving, right? I mean, there seems like there's a lot of hype going into the halving, but if we get a cool-off phase post-halving, where for 200 days, Bitcoin isn't really pushing more new highs. That doesn't mean that we can't put in new highs again before the halving. But let's just say if after the halving, Bitcoin cools off, or maybe it cools off before the halving. And last cycle, we had a pandemic right before the halving, and obviously that threw a wrench into it. But whatever happens, right? If we do enter into a several 100-day cool-off phase that could, last 6 months or so, then maybe you argue that the cycle plays out like it normally does, right? But if, on the other hand, it plays out in the ways that it has played out previously when breaching new all-time highs, it wouldn't suggest that you're then going to get 2 years of what you normally see after that. And so it really is interesting that it's a combination of prior cycles, in the sense that we broke the highs before the halving. That's never happened before. We are rallying into the first rate cut, which is probably coming sometime, I don't know, like this summer or something, which is really not that far away. I mean, it's already March. We're probably not getting a rate cut in March. The next meeting is May 1st. The meeting after that is June, and markets are currently expecting a rate cut in June. Last cycle in 2019, we saw Bitcoin peak out in 1 month before the first rate cut, right? So if the first rate cut is in June, then you have May. If the first rate cut's in May, then maybe you have April. Going into the merge, ETH peaked 1 month before the merge. So if that's the case, it would mean March for Bitcoin. So I'm really curious. I mean, honestly, I would like to consider myself more of a student of it. I don't know what's the most likely outcome. I feel like I can find evidence to support both views. Like, I can find plenty of evidence to suggest, hey, it's like 2019 in the sense of you're rallying into the first rate cut, gold's breaking out, and back then in 2019, gold broke out and it marked the top for Bitcoin. I mean, gold broke out and then Bitcoin topped like, a week or two later. And then the market cooled off. It dropped, it dropped considerably for the next 6 months, and then we kind of picked back up later on. So, I mean, so you can certainly see there's evidence to suggest that it could play out like 2019. But then there's this other element that is valid, that people say it's not like 2019, despite the fact that it's QT and high rates, because we put on a new high. And I can sympathize with that view too. I'm like, we've never had new highs before the halving, right? So I'm really interested, honestly. I'm really interested to see what the next couple of months bring us, because I think the next couple of months will be relatively instrumental in helping us better understand, the most likely outcome in terms of cycle theory, if you will. So I don't know. And of course, there's also the theory that there's other theories as well. I don't really want to get into those in the video, but they essentially revolve around much earlier, right? Like .com-esque, right, where the market topped in coincidentally March of the election year. But in terms of just going with like cycle theory and stuff, I'm really interested to see how it'll play out, and I do think that the correct answer to is it 2019 or is it 2020, I think the correct answer is it's 2024, and we've got elements of both, and we're sure as hell going to find out what's more important. Is it all about the momentum that hitting a new all-time high brings, or does it come back to monetary policy? And has the Fed gone too far? And, do we have to go through a period where the Fed refuses to cut rates as much as they should because they don't want inflation to come back, and it just leaves crypto investors begging for rate cuts in the hopes of avoiding a slowdown in the broader economy? And I think that upon the uninversion of the yield curve, I think that could be a short-term catalyst for a pullback in the market. But whether it's sustained or not, whether it's, I'm not going to edit it out, but whether that's sustained or not, I don't know. Because there's evidence. I mean, everyone says, well, rate cuts are at least they mean something for stocks. Well, when the Fed cut rates in 2019, stocks kept going up. So it depends on why the Fed's cutting, right? If the Fed's cutting because the labor market is falling apart, then it's bearish for stocks. If the Fed's cutting prematurely because they just want to go to more accommodative policies so that they don't hit a weakening labor market, then it's bullish for stocks. The main challenge for the Fed this cycle is that the reaction function by the Fed is delayed beyond what it would ever normally be because of inflation, right? Under most circumstances, the Fed would have started cutting long ago. And again, like if, just to give you an idea of what I mean, if you just pull up bankruptcies and sort of look at that on the chart, we're still below where we were in 2019. But if you look at what was going on in 2019, you see right here how bankruptcies were starting to slowly move higher. Well, guess what? The Fed started cutting rates. And not only did they start cutting rates, they started QE. They started to expand their balance sheet. Right around the time that these bankruptcies started to increase. Now the angle of attack, are any of you guys aerospace engineers? The angle of attack on the bankruptcies is a lot steeper than what we saw over here, but still at a lower level, right? It's still at a lower level than what we saw back over here, right? This was at like, what, 22.8K? We're currently at about 19K, but it wouldn't take much longer, right, to surpass that, right? I mean, these are, if you just kind of look at this, if we continue at this rate, it would only take until the summer, coincidentally, which is when the market thinks rate cuts are going to arrive. It would only take until the summer to even get back to where we were in 2019. And the problem is that, back over here, when the Fed cut, it was preemptive, right? It was to avoid issues in the labor market. Can we make it to the summer without labor market weakness? That's the big question, right? And at the end of the week on Friday, I will do a video on the labor market because we're getting in labor market data today. We're gonna get some tomorrow, or so I guess I'm making this video pretty late at night, so it's already Thursday. So we got some labor market data on Wednesday. We'll get some on Thursday. We'll get some on Friday. So on Friday, we'll do a video on the labor market data and see if it's holding up, see kind of what we're looking at. And I think that's what it ultimately boils down to. So, if all this happens soon and Bitcoin has a catalyst that makes it so it's not able to durably pass the all-time highs, like maybe it even goes above them again and even goes into the 70s before the halving, right? Like that's always a possibility. But if it can't sustain it for longer, then you still have your typical cycle behavior in play, right? Where maybe you cool off for 2 to 3 quarters, and then you get another risk on phase, kind of late halving year, post halving year. But if all that keeps getting pushed off and we accelerate into new highs, history shows that you're maybe looking at 6 more months. And then that's where you could theoretically get into a left translated peak. I think we should be open-minded. I really do. I think it makes sense to be open-minded. I also think that, I do think that monetary policy plays a role. I think the labor market plays a role. I think a lot of people think the labor market doesn't play a role because everyone's been talking about it forever and it hasn't really done a thing. But I've always said, right, 4%. Once the unemployment rate hits 4%, that's when we find out, I think. And that's probably when the yield curve uninverts is, 4% unemployment. Who knows how far away that is? I know there's some institutions that think we don't hit 4% until the end of next year, So who's to say exactly how long that would take? But it is interesting how you can find elements of both stories. And I see these polarizing views on X and on YouTube where, everyone's very opinionated about it and because they can find the evidence to support their view. But you can find evidence to support both views. I'm relatively a risk-averse investor for the crypto space. A lot of people would consider me super, I take on a ton of risk just because I'm even in crypto to begin with. But for someone who's in crypto, I'm fairly risk-averse, right? I stick mostly with Bitcoin. That's why I talk about the Bitcoin dominance and everything. I stick mostly with Bitcoin because I sleep better at night with that over a basket of 100 different altcoins that might get rugged tomorrow, right? So I'm relatively risk averse, and so I do focus a lot on monetary policy and the labor market because I don't want it to be an oversight. But I also want to respect, all these other views regarding hey, we're hitting new highs. What about the momentum? You have the halving, all this other stuff. I want to be open-minded to that stuff too. So that's kind of where we are right now. And we'll see what happens going into the halving. If gold's breakout is a signal to Bitcoin that, hey, you got to cool off for a little bit, like it gave it over here, then cycle theory, I think, is still theoretically intact, kind of how it normally. Think about this. Bitcoin could drop a considerable amount and still be within the prior bands of the last 2 cycles. Even though if something like that were to happen, I imagine it would be interpreted in an entirely different way. but it could, right? I mean, it could drop a considerable amount and still be doing what it always has. But if it accelerates, and we as you look at it as measured from the April peak, and if it accelerates, then you start to wonder, is there something to this, translated peak idea? And if you go look at the year-to-date ROI for 2024, and you look at it compared to, say, 2020, 2016, and 2012, all prior halving years, we're actually ahead of all prior halving years. And remember, what's fascinating is that 2023 actually followed the average of not pre-election years or pre-halving years. They followed the average of halving years or election years. So if last year followed the average of the halving year, does this year follow typical post-halving years? And maybe you look at 2024 compared to 2021, right? Or you look at it compared to 2017 or 2013. Again, I don't ever expect it to keep pace with 2013 or 2017 over a long enough period of time, even though right now it's ahead of 2017, because you experience diminishing returns from one cycle to another. But yeah, I mean, that's where I am. I mean, I just wanted to come on here, have a discussion about market cycle theory and just kind of put out some of my thoughts. There's a lot of people that have these ideas. I come from academia, and so what you do if you talk about a video is you do like a literature review, or if you're not to do a video, if you're going to write a paper, right? If you're going to write a paper, you do a literature review and you see what else is everyone saying about this. What does their research show? And there's people that say left translated peak. There's people that say a peak this year followed by a catastrophic bear market that lasts until the end of 2026. There's people that say you're going to get a normal cycle that peaks out in 2025. Some of those people though that say that aren't really thinking of a larger pullback now. They just think it's going to basically break the all-time highs and go straight up for a while. And there's people that are calling for $1 million a coin, right? Which is, I mean, it seems insane to me. All the models that I did back in 2019 when I was trying to predict out when Bitcoin would hit $1 million, it suggested it wouldn't happen until the late 2030s. But again, I mean, who knows? That was when I made those models, it was before the Fed printed $6 trillion, So, I mean, I don't know. Maybe it doesn't take until the late 2030s or 2040s. But it's all interesting to think about. And then, of course, there are people that say, hey, and I certainly say if gold breaking out is a signal and Bitcoin does cool off for a little while, then maybe it plays out like normal cycles. And we just had a heated phase of the cycle early on, and then you get a cool off phase, and then you get another phase sometime thereafter. But certainly a lot of different theories out there. We'll do video updates on this stuff as the months go on. We probably don't, I don't need to do market cycle theory video every single month or every single day, but maybe every, couple of months or so, we can check in, see where we are, see if it's following prior cycles or if we are accelerating into a translated peak. Anyways, those are my thoughts on the matter. If you guys like the content, make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.